Hey team, it is once again Sunday and time to dive into this week's ETF and MAXLIST review. So we're taking a look right here. First one's ARK. We sort this alphabetically. ARKK, ARK Innovation, and you can see weekly on the left, daily on the right. It's trending nicely. Perhaps find a support here and a bounce off the ADMA. I mean, it did it here, and got a good trend. That's something to maybe watch going forward. ARKK. What would be the setup? Bounce off the ADMA. That's the yellow moving average, or the gold, however you refer to it. Bounce off there with volume. It did again lift off on a slight pickup in volume on Friday. So it's something to watch going forward. ARKK. ARKW is just basing here. It looks good though. You can say there's no super clean entry on it at this point in time, but it does tell us something, and it has told us something. This is a leading group. ARKW, you could punch up ARKW and find out their top 10 holdings, and I guarantee you will see some stocks go, oh yeah, I know those stocks, by gum, they did make moves. Systemization. Folks, this is what we do at Mission Winners. Systematize things. Make it easier for ourselves. It's trending nicely. There's strength there. Buy strength. Key on strength. It will really help you, I promise. And never argue with price. Biotechnology, what does this tell us? Stay away from it. There's nothing there. Stay away from biotech. Stay away from the ETF. It's in a downtrend. It's below the falling 50-day. I said this at IBD meetups forever. The air is better above a rising 50-day moving average line. There you go. That's simple. Nothing there. Let's move on. Stay away from biotech. Energy lagging. Leave it alone. Look, it's below the falling 50-day. Leave it alone for now. Nothing to do with it. First Trust Internet. Trending nicely. FDN. I guarantee you could punch up the ticker symbol FDN and find out what their top 10 holdings are, and you will see some that made good moves. We probably own some of them. There it is. It's working. It's trending nicely. Now, there's some selling in it on Friday, but it's made a pretty good move. The trend is still up, but there's no clean entry here. Don't buy it here, okay? But again, if you saw the start of this trend here or here, those would have been good buys. So for right now, and again, there's some selling coming into it. You see that? Look at the selling bond. Just wait on it. Also, if you own internet stocks, you might want to take a look and make sure they're not getting too sloppy. IBD 50 is still kind of underperforming here. This needs to show some power. Also note, there was some selling volume on these bars here, folks, these two bars. Look at that. So IBD 50, a little bit of underperformance at this point in time. And I'm not knocking the IBD 50 or the newspaper. No. Bill O'Neill changed my life. I'll tell you that. Credit where credit's due. And I had the great honor of meeting him a couple times one-on-one and talking to him, shake his hand, look him right in the eye and said, sir, you changed my life. And he did. Okay, so gold miners, there's no power here. It's below the falling 50-day, leave it alone. You don't have to overthink it, folks. I'm not being funny. I'm just saying, what's the trend? The trend is down. Why try to buy the bottom? I don't know where the bottom is. Buy strength. Don't buy weakness. Continue onward. Gold's a little sloppy. Look at this. Oh, it's going. Boom, they slam it right back down. They're not buying it. Leave it alone. Let's move on. Cybersecurity. On the other side of the coin, it's grinding. Excuse me. It's grinding up. And that's good to see. Maybe look into hack and see where the top 10 holdings are. You may find something. It is a little bit extended here, but you might find stocks. Top 10 stocks in hack. You may find something that looks good. But what's the trend? The trend is up in cybersecurity. Biotechnology. What's the trend? The trend is down in biotechnology. Done. Go to the next one. See, isn't this neat? By the way, I'm not trying to be funny here. I'm just being direct. There's no opportunity in that group. Go to the next one. This one's basing here a little bit. Online retail. Perhaps it'll base. What's a big stock in this group? In this Amazon. Okay. And it's just basing, but it's a little choppy right now. So be cautious with that, okay? Just for what it's worth. Let's move on. Software technologies trending up nicely. It's a little bit sloppier up here, but the trend is up. Technology, software, medical got weak. Look at that. Look at the drop here. Fell on heavier volume here. Fell on heavier volume here. Be careful with medical stocks. How many of you knew that? Now you do. And that's why we do this at Mission Winners. It helps us. You say, Pat, how long did it take you to run through this ETF list when you're just doing it for yourself. Gosh, I bet you it takes close to a minute and a half. That's it. IJH, there's nothing there. Mid-cap, leave it alone. Aerospace and defense, look, aerospace and defense, stay away. Nothing there. Move on. Home construction, lagging, leave it alone. S&P 500 growth? S&P 500 growth doesn't look too bad. What does that tell us? Do we own some S&P 500 growth stocks? Yeah, it told us to. Price and volume told us to. No forecasting, just getting in line with what is. Small cap lagging, leave it alone. Real estate, no, nothing there, leave it alone. Transportation, nothing there, leave it alone. Airlines, just basing right now. It's in a channel here, but it needs to start showing some power. There's a little bit of weakness showing up here. The trend is still up, but we need to see it take out these tops here. And I'll draw a line to help you. By the way, folks, you are priority. And if you want me to talk slower, just pass a note, tell me to, and I will. There we go. Airlines, kind of hanging in, but a little choppy up here. Continue onwards. Regional banks or banks, there's nothing there that's powerful, leave it alone. Insurance, nothing there, leave it alone. Regional banking, nothing there, leave it alone. Mid-caps, underperforming, not a lot of power. Remember this. I'm going to go back to this. It's a little bit below the falling, or a little bit below the 21-day moving average. Remember that on mid-cap, okay? You'll see why. Oil, leave it alone. Oil services, nothing there, leave it alone. Pharmaceuticals, nothing there. They need drugs. Leave it alone. NASDAQ 100. Now look at this, trending up. Isn't that nice? I just showed you a bunch of indexes that don't look so good. And then you look at this and say, that don't look so bad. Yeah, and that's why we own a lot of NASDAQ 100 stocks. It's told us to. We don't have to forecast. Isn't that great? This is fun. I'll tell you, it's like going to the carnival. NASDAQ 100 QQQ, non-leveraged good. Retailing has shown some power. It's getting a little, some selling here, but not bad. Okay, the trend is still good. I mean, it's just a hair below the falling 80 EMA. Cloud computing doesn't look too bad. Silver, nothing, leave it alone. Steel, nothing, leave it alone. Did you see the theme there? Look at that. Steel, silver, both metals lagging. There's a lesson right there, connecting the dots, nothing to do with it. Or the others in that group. Semiconductors need to show a little bit more power. Kind of sloppy here. Look at the weekly. There's not a lot of conviction. So be a little careful with semiconductor stocks. That's kind of good to know. Same thing's true with the Direxion semiconductor. Spiders are just basing up here. It's fine. It's just basing, needs to push above these tops. Already have a price alert set. We'll watch and see what happens. Same thing's true with SSO. Solar, stay away. Small cap, stay away. Oil is just basing. It's not too bad here. A lot of overhead here. And notice how loose it is on the weekly. Notice how loose it is on the daily. Okay? We need to see some power there. I mean, look. Oh, it's going. This is it. It's going. Oh, they took it down. Oh, this is the one. It's going. Ugh. Be careful with that. All right? You want to see it push through clean bit tops and do it with volume and stay up there. Another very important lesson. I taught this for years at the IBD meetups. Never buy a full position at one time. Always ease into the stocks. You'll be better for it. It'll help you. And some level 3 and 4. Here we go. Aerospace and defense, not a lot of power there. Leave it alone. Biotechnology, no. Look at that. That's downright ugly. Leave it alone. Home builders. They don't like rising interest rates. Stay away from home builders. Materials. How do you build houses with materials? Look at that. Well, houses aren't doing too much. Oh, guess what? Neither are the materials. Isn't that neat? Connecting the dots, folks. Simple. Communications doesn't look too bad, trending up nicely. XLC, and has acted decently. You could punch up XLC, find out their top 10 holdings. There we go. We're about done here, just to let you know. Energy, stay away. Financials is just basing, needs to show a little bit more power. Industrials, not a lot of power. Stay away. Oh, technology, that one's kind of trending up here a little bit. See the difference here? Look at this. Industrials, ain't nothing good there. Well, that one doesn't look too bad. Maybe forming a cup with a high handle, we'll have to watch it. It did tail off a bit here. It's just saying be a little cautious. That's all. Consumer staples, too loose, choppy, nothing to do with it. Utilities. What are interest rates doing? They're going up a little bit. They're talking about going up more. This is very interest rate sensitive. And look what it's doing here. What does that tell you? Be careful with interest rate sensitive stocks. There we go. Continue onwards. Healthcare, nothing to do with it. Leave it alone. Consumer discretionary doesn't look too bad, does it? Consumers got to buy stuff, right? Feed order and everything else. And it's trending nicely. There's no clean entry on it, but it's acting decent. It's something to look into. Continue onward. Metals and mining. Whoa! Look at that. Stay away. Here's another important lesson for everybody. Don't argue with price. If it's dropping, okay, stay away. That will help you. Continue onwards. Oil and gas, kind of sloppy. Leave it alone. Retail's basing up here. Maybe that'll be a candidate. Maybe looking at some retail stocks. Software, we're involved with software, trending nicely. We're just going to let it work. Before we go further, I will let Owen talk for a bit while I go get some tea.
First off, Pat, thanks for the excellent ETF review. You always make it easier to spot where the strength is and where the weak spots are hiding. Knowing where to focus is half the battle, and this week's breakdown hit the mark. For those of you just joining, I'm Owen Larson, and I'll be your guide through this short interlude podcast. My goal here is to highlight some key takeaways from Pat's ETF analysis, tie in a few broader market strategies, and set the stage for what's to come in his MAXLIST segment. Now let's dive in. From Pat's review, there are a few standouts worth mentioning. ARKK and ARKW, for example, are still showing strength. ARKK bounced cleanly off its 8-day moving average on Friday, which could mean there's more upside potential. ARKW, on the other hand, is basing, no clean entry yet, but it's worth keeping an eye on for the right setup. On the flip side, biotech and energy are looking rough. Both sectors are trading below their 50-day moving averages, and there's just no strength to speak of. When you see trends like that, it's best to step back and let them play out. No need to force trades in areas that aren't working. Another highlight was the First Trust Internet Index, or FDN. It's been trending well, but there are early signs of selling pressure creeping in. If you're holding internet-related stocks, it might be a good time to review your positions and make sure nothing's getting too sloppy. The big picture here is simple. Stick with what's working. Whether it's ETFs or individual stocks, focus on strength. The market rewards those who align with the trend, not those who try to outsmart it. That idea of focusing on strength ties in perfectly with something I've been reflecting on this week. How to minimize trading losses while staying aligned with the market. One of the most effective ways to do that is to make sure you're trading in the same direction as the broader market. Here's why that matters. Around 85 to 90% of stocks tend to follow the S&P 500 or NASDAQ 100. If the market's pushing higher, it makes no sense to short individual names unless you've got a rock-solid reason. And even then, it's an uphill battle. Aligning yourself with the market's direction gives you the wind at your back and improves your odds of success. Another key idea is to stay disciplined about cutting trades when they show signs of trouble. The moment something starts looking wrong, it's better to exit early and take a small loss than to hang on and let things spiral. It's not about panic, it's about protecting your capital so you can fight another day. For options traders, there's also a lot of value in structuring trades that minimize risk up front. Using strategies like spreads or butterflies can help turn potential losses into break-even trades or even tiny wins. It's all about being proactive and planning ahead so you're not stuck hoping the market does exactly what you need. Now let's talk about what's coming up in Pat's MAXLIST segment. This week, Apple and Tesla are standing out as leaders, riding their 8-day moving averages with strong trends and healthy volume. If you're looking for market direction, these two are worth watching closely. NVDA, though, is starting to show signs of lagging. Compared to some of the other AI names, it's not carrying the same momentum, so it might be a good idea to tread carefully there. Pat's going to go deep into the details, but here's the bottom line. The MAXLIST stocks often act as a roadmap for where the market's headed next. If you want to see where the big money is flowing, this is the place to look. And with that, let's turn it back over to Pat for his deep dive into the MAXLIST stocks. These are the names that move the market, and you won't want to miss what he has to say. Take it away, Pat.
Sure thing. Let's jump into the MAXLIST. Apple, we own from down lower, and it's just trending. This is the 8-period exponential moving average. This is the 21-day exponential moving average. Look at the trend here, folks. You don't have to overthink it. Just get in line with the trend and let it work. Watch it. Don't be ignorant of what's going on, okay? But this will help you. Trending nicely. A little bit of a tail bar right here. Okay, a little bit of selling coming into it. You can say how you can say that. Gapped up and a close near the lows on a slight volume pickup. It's not the end of the world, but that's a good lesson. Just things to look for. Let's move on. I don't want to take too much of your time. Amazon, own it. It's trending nicely. Look at the weekly. Look at the base on the weekly. Look at the volume pickup. Watch this. This is just like a birthday party. It's just going sideways. Boom, it pushes through that line, those tops, simple downward sloping trend line, and it does it on volume. There you go. And refresh. And this is where we're at now. We're in good shape. We'll just let it work and see where it goes. And again, weekly on the left, daily on the right. Trending. Move on. Alibaba. Let's do a compare and contrast. Well, this kind of looks like it's going up in price. You know, okay, that's okay. Well, this one's not doing anything. Don't overthink it. There's nothing there. Leave it alone. Oh, maybe it's going to turn up. Don't play the maybe game. Look for strength. There's none there. Move on. We have a limited amount of money and a limited amount of time, and we try to use both wisely. Here we go. BIDU still languishing at this point in time. Not a lot of power there. Leave it alone. Google. Google had a weekly downward sloping trend line, and it gapped up right here. You see that? Taking out the tops of this bar, going sideways, and it lifted off, and it did it on volume. That's the key. And it was bought a couple of times, and it's working, okay? Now, what do we do next? Watch it. It goes up on heavy volume. This is a great lesson. Up on heavy volume, up on heavy volume. Closes near the highs on this bar, closes near the highs on this bar. Falls on decreasing volume. There's not much selling going on. Look at the selling volume versus the buying volume. There's not much selling going on. So it's something to watch going forward for a potential add-on or new buy. There we go. Goldman Sachs just going sideways here, okay? There's no real clean entry at this point in time. There was fairly heavy selling volume here. Maybe it's going to base a little bit and lift off the 21-day. We just have to watch it. There's just not much power. And even on the weekly, it fell on a slight pickup in volume. So just got to wait. MasterCard started to pick up, and then they gave it right back. Now, here's a telltale sign. When it started to lift up here, was there much volume? Not really. Look at the volume on it. Volume, again, I can't stress this. Volume tells us other people see what we see, and they're buying it. And that's what we want. Not much right now, so we just have to wait on it. Maybe it's going to base out and go, but for right now, we'll just sit tight and see what it does. Let's move onwards. Meta. Meta is owned from down lower. There's one spot here. This is the daily, and this is the weekly. Isn't that nice? Nice base. Lifted through here, volume pickup. It's in good shape. We're going to let it work. We sold a little bit. Now we'll see what happens. It's got support on the ADMA. We'll watch it and see if it bounces. It did here. Maybe it will here. The beautiful part is this. We don't have to forecast. We just let the chart tell us what to do. Price and volume. There we go. Let's move on. Microsoft lifted up. Here's a good lesson for all of us. When you see a bar run up and then close near the lows, be a little cautious with that. I call that a tail bar or a selling bar. They sold into it right here, okay? So right now it's a little sloppier. The trend is still up, but just be careful buying right here. Let's see the dust settle down a bit and see what it can do. Let's move on. Netflix. Look at this. Look at this base right here. Isn't that beautiful? Look at how simple that is. And it's just going. There you go. Where's it going to go? I don't know. What do? Note very closely. This is the 8-period exponential moving average. Folks, if you look closely, this stock has not closed below the 8 for this entire trend. There is a lot of research in that moving average, folks. I mean, like, did you study it for months? Years. It's a great moving average. Don't argue with it, okay? Just let it work and see what it does, okay? Trends pay. And maybe, by the way, maybe it's going to bounce off the ADMA and go. You say, gosh, does it ever do that? Well, I don't know, but it looks like it did it here. Well, I don't know, but it looks like it did it here. There you go. And it started to do it here, but then gave it back, okay? But it was a good run here, and it was a good run here, bouncing off the ADMA. There you go. So we'll watch it and see what happens. It's just resting now, and that's good. Not all negative on it. It's like stocks are like horses. They're running a race, and every once in a while, they got to kind of slow down and catch their breath a little bit, right? Here we go. So we'll watch it. We're in good shape. We'll watch it and see what happens. Continue onwards. NVDA was such a great stock for us. I mean, we bought this back here on the weekly. Look at the volume pickup on that bar. Oh boy, I still remember that. Coming through here, you call it 54 bucks. 54 up to 150. I mean, now there's a big run here. 54 up to 120, 130. That's serious money. And we rode that trend. Now it's acting a little choppier here. It's actually underperforming. There's other AI stocks that are doing well. This one right now is not doing too much. Also note, price and volume right here. Fell on a pickup in volume, goes up on less volume, inside bar on less volume, falls on a pickup in volume. They're selling it right now. Not a lot of power. Be cautious. Be cautious with it. Continue onward. NVDL, similar situation. Block is looking okay. Rallied up. Starts to pause here. If you own it, you sell some into strength. Why? When it's hitting these highs, it's doing it on lower volume. Right now, there's no clean entry on it. Just leave it alone. Let's move on. Tesla. Gosh, I love Tesla. Base down here, base here, small base here, and a list back, and then it takes out, watch this. See, you don't give up on them. You keep watching them. These are MAXLIST stocks. Got a base right there, folks. And then look, when it pushes through, look at the volume pickup on that bar right there versus the previous bars. It picks up there across clean tops. Oh, the next bar goes higher and volume picks up a little bit. Oh, look, it goes higher here too. Just trending up, okay? You let it work. It's working. When's it going to stop? I don't know. Nobody knows the future. All we do is we ride it for what it's worth. May sell some into strength to guarantee profits, but this is a good lesson for everybody. By the way, that's the reason we started Mission Winners, Owen and I. The idea of educating people on what to look for. Truly illustrating, explaining, educating what to look for, and then what to do. There you go. Let's move on. So it's trending nicely. Now, we're in it. It's working. Got to share this with you. If you don't own it, don't buy it here. Do not. This is an important message. Please do not buy or chase price or extended stocks. You can get yourself in trouble. Buy close to the pivot on a clean and simple basis, or don't buy it. And that will really help you. Honest to goodness. Speaking from my heart. TSLL's working. We own this. What's the top across here too? I'll draw this for you. Just going sideways. Lifts off. Volume pickup on that bar. Look, on this bar, the stock did volume of 31.7 million shares. On this bar, I'll round it, 57 million shares. Check it again, 31.7 to 57 million. They bought that sucker. They saw that base. Yeah, we did too. And there it is. It's working. Tesla. Where's it going to go? I'm not being funny here. We don't know the future. We don't know. We just get in line with what is. That will really help you. Continued. Visa, kind of chopping around here, maybe forming a small base going across these tops. Already have price alerts set. We'll have to watch it and see what happens.
All right, team, that's our weekly review. Hope it helps you get a clearer picture of where the market's headed and what stocks to keep an eye on. By the way, don't forget about our weekly top stocks to have on your watch list video coming out tomorrow at 1 p.m. Eastern. If you're curious about what we covered last week, you can find the link to that video in the top right corner. Remember, these watch list videos are just a small taste of what our VIP members get with the daily key list videos on missionwinners.com. So if you're serious about finding those super performance stocks, consider joining us. Now, I'm curious to hear from you. What are your thoughts on today's market review? Do you have any questions or concerns? Feel free to drop a comment below. I love hearing from you. Thanks for sticking around for the whole video. If you liked it, hit that like button and subscribe to our channel. And remember, stay sharp, keep learning, and keep finding those winners.